Hey, Bay Area buyers. It's a really special day. We got David Park from Mary West Mortgage, who's going to help you buy and or sell here in the San Francisco Bay Area. We also have our great agents, Aravik Makajian and Misha Morgray. Aravik, you want to say hi?
Hi, guys.
We're going to move the microphone to you and let you just start talking and tell us what you've got. I know we found you because you had some great TIC loans, but you also have some really great loan options for those people looking for multiple unit buildings and other things. So we can't wait to hear what you've got for us today. Thank you.
Well, thank you for the invitation. It's my pleasure to be here. My name is David Park with Mary West Mortgage. We do fractional TIC lending as well as traditional financing for single-family residents, condos, multi-unit buildings. We also have commercial products as well. So basically, we could accommodate bigger array of loan options for your buyers and also sellers that may want to know how to properly set up their building for the sale. So we have a variety of different loan options from fixed rate ARMs from the 5-year, 7-year, 10-year fixed rate ARMs, as well as the 15 and 30-year fixed programs. So it really depends on the specific transaction details that I could give you the loan options. One thing that we're also known for is the higher loan to value or minimum down payment, 15% down. So it does bring in more opportunity for buyers that have good qualifications for income, but they just don't have that 20% down yet. So we have a lot of buyers coming in getting pre-approved for that. Okay. And in terms of pre-approval process for our buyers, we have a very efficient way in terms of once we have the introduction from the agent or when they call us, we have a secure way of getting the file created online. They create their username and password code online. And so we communicate that way and they upload their documents securely through that portal. So everything is done very securely and efficiently. And in terms of pre-approval, sometimes I get a buyer that may call Friday late in the afternoon and saying, "Oh, we want to make an offer this weekend." And so we could accommodate getting someone pre-approved quickly for those types of needs as well. So, and in terms of any times you have questions, please feel free to chime in. Okay. But in terms of rates, we try to stay very competitive with our pricing. And I think that's been known from the realtor referrals that we're getting. And also the type of qualification process that we have. We have a higher debt to income ratio guideline. So at 45%, some lenders are below that.
I get our sophisticated buyers really get what you're saying.
That's it.
But I find that people who are buying houses for the first time or just going through this process, it feels like a foreign language. So what do you mean by debt to income? I know. Just if you could simplify it, what is the reality? Let's say Misha's going to have a listing out in Novato, Misha, and it's coming on right around 900,000, actually right above 800,000. Say she gets a buyer who wants to pay 850. What do you mean when you say, what are all the things that you offer that could be helpful there?
Yeah, so once the introduction is made with the buyer, again, what I do up front is really try to understand what is their goal and what is their intent for the property, primary residence, how long do they intend to stay there if they know that, maybe they just want to live there for a few years and then upgrade or move. So I could better recommend what type of options would be best suited for what they're intending to do. And then in terms of their capacity or ability for down payment. Can they do 20% down or do they have to do something less than that? So we look at various options. So we look at the different qualifying factors of their down payment requirements to their income. When we talk about debt to income ratio, we assess what is the overall housing cost for that particular loan situation based on their down payment and the program and interest rate. And we determine what is their estimated housing plus anything else that they may have on their liability side, maybe car payments, student loans, other debts that shows up on their credit report. And we analyze what is their overall debt and we divide that into their qualified income on a monthly basis and we get a percentage. So that's the percentage that we look at and for pre-approval. So one thing that we do up front is we do get all the incomes and assets and credit information and liabilities verified. So our pre-approvals, we run that through, make sure that there's no surprises as we progress. Because once we send that letter, we want to be very confident and send that message to the listing side, the seller side, as well as the buyer's agent and the buyer themselves, that they have gone through this process without verify that information, and that letter is very, you could stand behind that.
So I just want to add to the clarification for the buyers, and maybe we can also distinguish those two terms here. We need a pre-qualification from the lender or fully pre-approved, underwritten.
There's definitely different levels of pre-approval or pre-qualification. So, sometimes if it's a very quick and they just want to know, do I seem to qualify? I talk to them on the phone, and the information that they give, I can run some numbers and yeah, it looks like you will, let's go through the application. Strongest way of doing it is getting a full application, all the documents uploaded and verified. And we actually send that file in as a to be determined purchase transaction to underwrite, where the underwriters review all the documentation, they analyze it, maybe adjust any of the incomes or assets, qualifying assets on the file, and then we could actually say that it's been fully underwritten and the buyer is approved, right? So then as long as the property is satisfactory, then it would be a completed deal. So we could go that far. And then when it comes to pre-approval, when they submit the offer, sometimes I get the calls from listing agents saying, hey, what's the strength of the buyer? Do you feel confident?
Right.
And if we could say their file's been underwritten with their income and assets and credit and employment, so that they feel very confident, okay, if we accept their offer, the likelihood is that it will close.
David, I was going to say, one of the things that I'm picking up in your communication is, number one, you are not going to waste an agent's time, because if that buyer, you can tell right away, if it's not going to qualify or be able to do this, you're going to let us know. But if there's strength, you're also going to let us know. I know you can't give us details and you can't tell us all the personal stuff unless they've given you permission to share with us.
We underwrite a to be determined file, even though it's not an active transaction until it's actually in contract. We're actually put in the address of the subject property, and then it becomes a live transaction.
Does it shorten the escrow period or the time that it would take to close escrow
that does
when they're fully underwritten?
Yeah, that does help, and just creates a lot more confidence. So, I know that out there you might be competing against the all cash offer. So when we're able to say the borrowers have been approved by underwriting in terms of their income and employment and credit and liability, it really is helpful to compete against the cash offers.
One thing that our team likes to do to build strength, we're looking for every opportunity to build strength so that our buyer has the best opportunity to get the deal. We ask that our lender not wait for the phone call, but call the listing agent right after we've delivered the offer. Would you be opposed to doing anything like that?
I believe that transparency and communication is extremely important, and there's not any one side. I consider we're all part of the team, from the seller, listing agent, buyer's agent, and us. We're all working together to make it a successful transaction. So throughout the process of the purchase and from the beginning to end, always I sending out communications, where we are with the file, what's our timelines look like. If there's a appraisal delay in terms of the due date, I'll communicate that immediately, so everyone's aware of what's going on. We try to move very quickly on files so that there aren't any delays, of course. It's the communication, I think, is extremely important for all parties.
David, I have a question about the down payment. You mentioned earlier that you can do a low down payment as 15%. Is that relates to TIC loans, or it is also to traditional loans?
Traditional, yes. Yes, we do. In terms of the current market, end of last year, there's been that declining of valuation. There was that concern of, well, what are prices doing? If appraisals, the only thing that we ask for or look for in the appraisals is that it shows stable housing trend. Recently in San Francisco, everything's been coming in stable, so it's been good. No issue of doing the 15% down. If some territories are still showing a decline, and the appraiser shows decline of appraisal, then we have to go to 80%, just so that you know that. Haven't had that issue in San Francisco.
You also said people looking for multiple unit buildings, up to 2 million.
1% is not a problem on those. We follow in terms of standard underwriting, like the Fannie Mae, Freddie Mac guidelines. However, we have our overlays, and our underwriters are common sense underwriters. They look at certain things and they go, okay, we understand this and check this off. So it makes the process of approval a lot easier and more efficient.
What about people who are selling a property and want to buy a property and have a listing agreement on the property they want to sell? Any advantage there for them?
Removal of the liability.
Yes.
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 We do take that into consideration and omit that as long as they're in contract or listed.
That's really good.
Just thinking in my head, because you were mentioning other territories, and there is those unique situations with clients who her clients wanted to buy a duplex that was TIC'd in Pacifica, and all the other TIC lenders were like, nope, we're locked down, we're only doing the city now.
Yes.
And you were the golden ticket that said, oh, we can do this.
Yes. Regarding territories, in the past, a lot of lenders will only, for TIC fractional programs, they would stick to San Francisco or LA, coastal properties, things like that. One of the things that Merrill West, what we're trying to do is develop the TIC lending throughout the whole state of California. So we understand that we're trying to open up territories in new territories that haven't had a TIC. So we have that understanding and capacity. We have that understanding with appraisers, the AMC, how to do that and develop the TIC program in new areas. So as you go out and look for potential new transactions, that's something that to definitely take in consideration, that we don't have a restriction in terms of the territory.
And
Definitely.
David, are you guys restricted to California alone? Or if we have buyers going to, I have buyers going to Dallas and Florida.
We do California and we have Arizona.
Got it.
One thing in terms of for the buyer's benefit, part of their pre-approval. So once they get pre-approved, what we do allow, it's called the virtual lock. So even though they're not in contract with the property, and with rates being volatile, and you may have seen the recent uptick in rates, a buyer that's looking, and once they found the property that they decide they want to make an offer, and during that negotiation, what they don't want is that rate to jump. The next day, the rates just went up. So we provide a 10-day virtual lock on a TBD file, so it protects them, even though it's not even in contract. Because normally all lenders, we can't lock until they're in contract. So this is something that we do offer, is a 10-day virtual lock on a pre-approved file.
When you mean pre-approved, are you meaning a fully underwritten file? Is that what you mean by pre-approved?
Well, once we determine, the loan consultant, that they're pre-approved, okay, because again, there's the different levels of pre-approval, from when we get the file, we verify it ourselves. We have our expertise to know, okay, this looks good. We issue the pre-approval all the way to the TBD underwritten file. Once the buyer may say, oh, I have this property I want to submit over the weekend. And like, for example, that Friday, if we get that file and we got it pre-approved, I can do a 10-day lock on that. So it protects them, allows them 10 days to get into contract, okay? Which is also a benefit for the buyer. Okay, I'm going to seriously go look and find a property within that 10 days, because what if rates went up? Greatly beneficial for buyers.
And there will be no cost to the buyers, yes.
I think that's a very special and unique program. I've never heard a bank doing that.
It's only a one-time thing, so we have to be very careful when we do that. So it has to be a property that they, we don't want to just lock it when they're still shopping and they don't have any idea yet. What we want to do is, okay, maybe they narrowed it down to one or two, and they definitely will be making an offer. Let's do a virtual lock and protect them.
And they'll have that feeling of security that they'll get it at the interest rate that's today instead of tomorrow, which is anticipated to be higher.
Exactly. And
oh, wow.
That's
good.
always you want to make it the whole transaction enjoyable. And, once they're pre-approved, then they feel confident when they go out shopping, for one.
Yeah.
And then when they're in negotiations, last thing they want is to get in the contract, and then Monday, rates just went up. Sorry, All
right, that would give the buyer even more confidence to not have a financing contingency and to be able to make a more aggressive, stronger offer, so that there's just not as many obstacles in the way for a seller to accept their offer.
When it comes to finance contingency, and that's maybe a different topic, right? Because it depends
Okay.
on the level of pre-approval, okay?
Right.
And there's other things within a file that that we have to have approved. For example, on the TIC agreement has to be approved there. The appraisal, I guess you could separate appraisal contingency to finance contingency, things like that. If they've already gone through the underwriting for them as a borrower, maybe that's, I think what you're mentioning is to remove that portion of it. Because if they're already protected with the rate, because let's say they're right on the line of debt ratio, what you don't want is them get into contract and then Monday the rate just jumped up and then now the debt ratio exceeds the guideline. It's been very beneficial, for buyers to have that confidence going in when they're making offers.
I think that's a very good asset to have, because my last deal, I've been telling the lender, can you lock my client in, the buyer? And she's like, well, they're going to pay a fee. And so that's good to know.
Yeah, no fee charge. So, what I ask, if you have a client, do an email introduction, and I definitely want to have a conversation with the client just to get that full understanding of what they're intending to do, and then expedite that process of the application.
David, is Mary West a mortgage broker or a credit union? I mean, I hear all kinds of things.
Mary West Mortgage, we're affiliated with Mary West Credit Union. We are a credit union. History is we used to be the IBM's credit union. So, but we are the lender. So everything is done in-house. Our corporate office is in San Jose. So from the point of origination to processing to underwriting to loan docs, disclosures, all that is done in-house.
Are the buyers going to be required to open up an account and keep money in one of your savings?
Yeah, that's not a requirement, but as a credit union, you have to be a member of the credit union. So a $10 fee to become a member, but you don't have to be a member to be a pre-approved member.
Got it.
When you're in contract, we start that process, get the paperwork, and you become a member. So it also gives us, because we're the lender, there are times where you may call me and say, Dave, I need this closed sooner than 30 days or, 21 days, things like that. And I recently had a transaction that close to a $2 million transaction we closed in 2.5 weeks.
That's my question, because I had clients write an offer that had 16 offers. They did have a contingency. In this case, it was for the sale of their own home. But if they had found a lender who would close sooner, I think that would have been very attractive to them. And are you saying there's a possibility of getting something closed in 17 days in order to make it competitive and to get attention in that deal?
So what I could say is we're capable of it. I've done it.
Yeah.
However, it's not something we want to do normally because it puts a lot of pressure on operations. We're expediting a file, and it's something that we do on, just not on a normal every single transaction, because then it would be very difficult to do that. So, but we do have the capability of doing that. If you have that type of transaction, if you have something that is competing against a cash offer, and we definitely need to shorten those timelines, let me know. We could get that to happen.
Misha has a listing coming up in the Novato area pretty soon.
Okay.
What is the best way to help a listing agent? What do you do?
Okay. So how we help listing agents, I presume it's not a TIC. Initially, what we do is we could do finance flyers for you. A lot of times I get the request for the 15% down scenario because, a lot of lenders have the 20, 25% down scenario, so they know that. But it's really to bring in more potential buyers. So some buyers may not have thought that they could do 15% on your property that you're listing. So we do finance flyers, and we showcase the 5, 7, 10. If you want the 30-year, we could showcase different programs. We also have the 15-year, by the way, on the fractional loan as well, and traditional properties. So what we want to do is show what for buyers when they come in, and let's say they're just shopping and they may be thinking I need 20% down, but they see a finance flyer saying, oh, we could do 15 right now. May allow you to get more potential buyers and more offers. So we do that. We'll send that to you. What I would need from agents is just the property information and some pictures, and then we could create the finance flyers and get those out to you.
I don't know about you guys, but I felt like I learned every time every time I talk to David, I feel like I learn more, and I feel like I have more tools in my toolbox. I really appreciate your time today.
You might get questions from buyers or other agents like, in terms of loan programs, why certain loan programs are preferred over one thing or the other, depending on their goals or their length of stay, but also interest rates are also an important part, right? The 5 years is the lowest rate, the 10 years a little higher, 30 years higher than that. So why choose one over the other? Certain things to understand from fixed rate ARMs are the caps, and that's something that not a lot of buyers understand. But basically, the 7 and 10 have a what we call 5.25 cap versus the 5 year is a 2.25 cap. So basically, the 5 year, if it starts, let's say 5.5% as an example, if it first 5 years is fixed at that rate, and then the next adjustment is 2% maximum adjustment for that adjustment going forward. So we also have the 5.5 ARM, which means that it locks in 5 years at a time. So instead of a traditional 5 year that is only for the first 5 years, and then it becomes an adjustable for the remaining 30 years. A lot of times someone that has this type of program will want to refinance and lock in again, fixed rate term. However, this automatically does it. So once it adjusts, it locks in 5 years at a time. So you have that first 5 years at the lower rate, and then maximum 2% above the start rate. You have that protected for the year 6 to 10.
And that's only if the interest rates have increased to that point. Otherwise, it's not going to exceed whatever interest rate exists at that time.
Right. So it gives you that protection, because let's say rates do go much higher. It has that cap of 2% versus a 7 or 10, which is a 5.25. So these are true to all lenders. The caps on a 7 or 10, since it's a 5.25, basically from your start rate, it could go to the life cap. So you have to determine where it really comes down to is what is your belief of interest rates as you get further along into that fixed rate ARM period. Do you think rates are going to be higher or lower? If you feel it's going to be higher, you may want to get either protected or do the 5.5 so that you have that protection of the 2% cap.
If we wanted to do an educational opportunity, something for our clients, I have several buyers kind of not sure, first-time home buyers, happy to do this kind of thing, a Zoom meeting with us.
Absolutely.
I really feel great. Like I've learned something again. Thank you.
A home buyer seminar or anything like that, definitely will be happy to be a part of it. Going back to the TICs, if you have a potential seller, and you want to know, do I have everything in place? A lot of times we find out that the seller may have insufficient insurance. They want to save their costs. As a TIC, you have to have the HOA insurance, not a personal individual insurance policy. So things like that, we could assess, like, what does that insurance look like? Is that going to pass the fractional, not just the seller's friends who's an attorney that wrote up something that may not been tested. So
we have lots of experience with TICs, and we know that all those check boxes matter, all those variables. So thank you representing and supporting our clients in this process.
Yeah, and we look at the annual budget, and I'll send you the TIC cert. It's similar to the condo questionnaire for condo transactions or limited cert that you may see sent out to the HOA for the questions to be answered. A copy of our TIC cert. It's a one-page document, but it's completed by the HOA rep.
Okay. I think that unless anybody else has a question or comment, I think this is if anybody out there has watched us all the way to the end here, we're looking for your comments, your questions. How can we serve? I will have David's contact information below, Aravek and Misha's contact information below. Reach out to any one of us. We're here to serve and to make sure you're in good hands and get from the beginning to the end with ease, joy, and a thrill when you finally get your keys, right? So
want to make it a pleasant transaction for everyone.
Yes, that's right.
Thank you, Dave.
Okay. All right. That was it. Let us know what you thought about that. And I hope you got some value out of that last interview. This is Anna Spathis with Sterling Homes. All of us here at Sterling Homes want to help enrich your life through real estate. All you have to do is ask, what are your questions? What are your fears? What are your successes? And how can we help? That's why we are here. We've been doing this since 2004, and we're going to keep on doing it and helping people, and we're going to enrich their lives through real estate. Hope we can do that for you too. Bye.